Hey traders, John Howell here, your number one market trader. So I am looking forward to another great week of the markets. And I want to share with you a few things that I'm noticing right now from a long-term perspective. And we're starting to get some bullish indicators in the markets as we've been pulling back right now. I want to share what they are right now and let's see what's going on in the markets. Let's get straight into it. Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so before I do start, this Master Trader bundle for only $4 that I've been running. My top chart reading and trading techniques that you can use on any market so you can improve your success rate, take the confusion out of the markets and understand what's going on right now. This Master Trader bundle for $4, I've extended it for today only. So if you did miss out on it yesterday, I've extended it for one more day. So link the very first thing in the description. So let's go have a look at what's going on across these markets and get ready for them. So we'll start off with the stock market and then I'll go to something interesting is happening with the mining sector, and we may be getting towards the end of this bear leg in the mining sector. I'll share with you what I mean in just a minute. Okay, so let's start off with the good old Russell. And the one thing I'm noticing with the Russell is the Russell has been pulling back quite hard. Okay, Russell has been pulling back quite hard. But the thing that's always on my mind is, and what we're looking at right now is that are we actually about to change the tune of the market? Right, because there is such things as bear markets and bull markets, right? No, John, tell me something new. Sometimes the blue is sometimes the sky is blue and sometimes it's gray. Oh yeah. Actually, no, John, the clouds are gray, the sky's blue. Get it right. Oh man, I'm on a roll. A couple minutes into this video and I'm on a roll already. Anyway. So the big thing I'm always watching for, and remember, the market is always right. It's never about me, it's about the market. So in a downward trend, what do we have? We have lower highs, don't we? As long as the market keeps making lower highs, we're in downward trend territory. So lower highs, this lower high here, and here, and here, and here. Guess what? That's downward motion, right? But what happens if the market starts to do something like this? Whoop. Oh, lower high, lower high, lower high. Oh, higher high. What does that mean? Oh, it may be what? A possible trend change warning, right? You start to see this. Then we get a pullback through here. The question is now, and a bit of a lesson for trend analysis, a bit of a lesson for reading the market. And actually in that Master Trader bundle, the video number 5, the video number 5 is an hour and a half training walking you through stuff like this for an hour and a half. But in a downward market, we have lower highs, right? So the most important part to a downward trend is continue making lower highs. That's the most important part to a downward trend. Now, the most important part to an upward trend is higher lows. Now, have we made a higher low here yet on this diagram? No, right? We've only made what? This was a lower high. This has now made a higher high. What does that actually mean? That's now a potential warning of a trend change in the markets. A potential warning of a trend change in the markets, okay? Now, again, it's a potential, not a guarantee. What we need to see is what's the most important part to an upward trend? Most important part to an upward trend is higher lows and higher lows and higher lows. Okay, so we need the higher low to start the bull market. Just like we did back here in the COVID crash, we had a COVID crash, came down. Look at this here, higher low, higher low, higher. See what I'm saying? So when the market started to create these higher lows and breaking past previous highs, that's when the bull market started, right? It wasn't anywhere near. It was just that's where it was. So in that case, and the reason why I'm sharing this with you here is that that we don't know what it is yet. It could be a potential warning, or we could just continue to get something like this, right? And then this was just a bit of a fake out by the big boys, and then down we go again. Okay, this would happen. This actually does happen in bear markets. So we need to be really caught. The thing that I'm watching for over the next, say, couple of weeks is to see, okay, do we actually start to create a bit of a higher low, and start to break past previous highs? If so, that we could be getting ready for a really strong bull run out of the markets. Okay, now this is trend analysis, guys. This is trading trend analysis. This is analyzing the markets. And so as you can see here, that we got this lower high, lower high, lower high. See what happened here? Look at this here. We made a what? A higher high. Now we're pulling back. So if indeed we do start to get something like that, that could be a complete trend. That will be a changer in the markets, because the market is now saying, hey, we now know for whatever reason, okay, and most of you amateurs in the markets, or if you've been around the markets for probably a couple of years, this wouldn't make sense to you, because you're like, how does that make sense? We're going into a recession. We're probably already in a recession. Things are looking bad. Dre Powell said this, that said that, this said this, the aliens are coming, whatever. And then the market does the opposite to what you think, right? That's the reason why we never want to think our way to trading. We can never think our way to success in the markets. We just need to see the market as is and then read it. Right now, the market is in a downward leg. So we could quite possibly continue down from here. But if we continue to hold here and bounce up, then we're probably going to start to see a really, really, really big move out of the market, because there's still a lot of liquidity on the sidelines, guys. The money didn't just disappear, right? Maybe for the bottom 50%, right? But there's still a lot of money on the sidelines waiting to be deployed in these markets once they get the green light, right? You watch, this thing is going to start to moon shoot to the moon. Moon shoot to the moon, there you go. So that's the first thing I'm noticing for when it comes to the first possible bullish sign of the markets turning out. Now again, guys, I'm not saying it's going to, right? We can get a little bit of a fake out and then continue straight down from here, okay? So the thing I'm watching for is, do we create the high low? If so, well then the trend is starting to really change. We're just getting a warning sign right now. The next thing I really want to share with you is looking at my moving average. So if you look at this here, let me take this off the screen. So I'm looking at the daily charts, and if I squeeze this day, looking at the daily charts, and I brought up a 52 moving average on the charts. Now notice something here. The moving average is telling me something right now. Okay, it's saying it's doing something which is like, oh, that's actually interesting. Look at this. So when the market is when the market is trending, when the moving average is trending up, that means we've got strong momentum on the downside. If the moving average is trending down, that means we've got strong momentum on the downside. If the moving average is just flattened out like that, we've got just flat sort of momentum there, okay? So you can see through here, right, we had a downward move, and then we started to pick back up, and as you can see, we had to pick back up, and then it flattened out through here, so there was actually no momentum. There was no long-term momentum at that time, as you can see, right? And so no long-term momentum, flat. This was flat trend, flat. The trend was flat, which means we're going sideways, and the flat, right? So that's the reason why you can see here, the reason why it actually had a fake out was because there was no trend, which means there wasn't making a high low or lower highs, what I walked through just then. And notice the moving average is flat. So that's the reason why that completely actually had a fake out through there. So, excuse me. So we can see now, by looking at the moving average, we came down, flattened out. We came down. Look what the moving average is starting to do now. What is this? See that through there? See where it's pointing? We're starting to point up, right? We're starting to do, this is what the moving average is doing right now. What does that mean? Possible bullishness is coming in the markets, right? Because the moving average is turning around. We're not flattening out, are we? We're not doing this. We're now starting to push back to the upside. Maybe, just maybe, we're getting ready for something like this to come back in, and the moving average is telling there's a bit of, even though the market's pulling back, there's a bit of momentum back to the upside. So maybe, just maybe, that's the bullish. That's a bullish situation now. Possible number two. One, we made a little higher high. Do we create the high low? And number two is now we're seeing. We're now seeing the long-term moving average now start to trend up. And whenever we do get this trending up movement, guess what? We tend to start to see the market trend in that favor there, right? But first the market, then we look at the indicators. And then what I want to do is then I want to bring on my long-term trend lines. The first big long-term trend line that I want to bring on, I'll bring up the weekly chart here for a minute. All right, so I'm going to bring on the weekly charts. Let's go to the weekly chart here. I'm going to bring on my long-term trend lines. All right, so the very first long-term trend line, we got this. This is that one back here. Started back in 2009. Then we had 2012. This little bit through here. which was around 16, and then we had that point through there, and you can see what we actually bounce, right? Bounced all the way up, and then we got the strong bounce through there. Plus also we had these levels through here back in 2019 and also 2020 before the big V boom, the V boom. That's right. There you go. That's what I should call it, right? The V boom. Hey, I should use that for my marketing. Come and see the incredible V boom pattern. It's just a V bottom pattern or a V marketing, right? V boom. Come see the V boom. I just showed you what the V boom was. You're probably saying, John, what's the V boom? A V bottom, right? You know when the market goes down like that and the market does that? It's called a V bottom. There, the V bottom. Well, generally speaking, that's a V bottom, and then the market goes boom, right? So V boom. I might use that. Anyway, so we're seeing that through there. But check this out as well too, right? So we see this. These are the long-term trend lines through here. We'll come through there. But check this out, right? Look at this here. If I go to my daily charts, look where we're at right now. Let me go back in, right? So these two thick lines through here, there's the longer-term charts. Longer-term trend lines, okay? So remember, so they're the longer term. But look what's happening now on a bit more of a shorter term, meaning like the whole of this year. If I start to identify some significant trend lines in the markets, look where we're at right now. Now, remember I said before, I'm stacking this, right? It doesn't mean I'm going to go long this market, okay? I'm just trying to understand what's going on in this market so I can get a fair idea what may be coming down the road, okay? Just being aware of possible. So if the market does start to turn around through here, I know what's going on, right? These things are stacking, okay? Then we're possibly starting to change. We're possibly starting to bottom out here in the market. Maybe, and if that's the case, maybe the market's starting to see that the inflations are going to come back down, and that's a big cautious. So therefore, if the inflation is coming back down, the Fed's not going to be so aggressive. Maybe the Fed even pauses, and then the market starts to rally. But remember, the market is the market sees things before you see things. All right, I'm going to say that again. The market sees things before you see things. And this is a big thing. Like people are like, the market's rallying, and then suddenly 3 months later, things start to pick back up. Right? It was like back here in the big COVID situation. How come right here was when everything was going banging nuts? Right? This is when the lockdowns happened and everything was just like shut down chaos. Right? And then guess what happened? This is when we had the national emergency and all that sort of stuff. But then suddenly the market took off. Why did the market take off? Because the market saw what was coming, right? So the market sees what's coming before you actually see it with your eyes. By the time you see it with your eyes, the market's here. The market saw here what it saw, what was back here. It's really, really, really smart. That's the reason why we listen to the collective wisdom of the markets, not our thinking thoughts, okay? So we can see that there's actually two trend lines here on the Russell. Now again, guys, this doesn't mean anything. Doesn't mean you go out there and start to buy the markets, okay? You should only buy the markets when you have a trading setup that you meet your plan, right? Don't be a bumblebee, all right? So, and I know 90% of you guys are not going to listen to what I just said there. You're going to go, oh, I'm going to buy the market right now because it's going to definitely go up. And then it goes down to 165. Oh, John, you suck. You said it was going to go up. No, I didn't. I'm watching what the market's doing, okay? So we have this high point. Look where we are right now. Boom, 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 right? And then we have all these support levels through here, and now we're at this support level through here. So we have those two levels going on, don't we? Two levels of major support. So there's three big keys, three big indicators that I'm looking at to say we're possibly forming a bottom and we're about to see a strong rally in the good old stocky market, okay? Let's go have a look at the Nasdaq, and we'll do the same sort of thing on the Nasdaq, but I'll go through this much quicker. The first one was what? The first one was that it's making a higher low, right? So we had this lower high through here. Now it's made a higher high. We could be possibly making a higher low here soon, okay? That's situation number one. Situation number two, when I squeeze my charts up, as you can see, look where the moving average is pointing. It's actually starting to slightly point up. What does that mean? What does that mean? Normally when that happens is that there's actually, even though the market's pulling back, it's showing there's a lot of momentum in that direction, right? So maybe we're going to start to see a bit of a rally out of this. Again, the market is talking to us. And then the third one is that we've got these major long-term resistance and support lines. Let's go back to the weekly charts here, right? You can see here that the collective wisdom of the markets. On the Nasdaq, we can see support, resistance, support, resistance, support, and then look what happened here. We actually found a lot of support through here as well too. Right, so we're seeing that in the markets right now, and we could do the same thing for the Dow Jones and the S&P and so on and so forth. But that's what I'm seeing right now, guys, on the good old stock market for when it comes through there. So before I get into the if that sort of stuff there, traders, that's what if you actually this master trader bundle, and I'm just quick little update here. That master trader bundle, what I just walked you through when it comes to trend analysis and understanding the trend analysis and understanding reading the markets. Video number 1 is really going to help you with that, and also, or possibly, well, actually these 4 videos here are really gonna what I walk through there, but also a lot more detail as well too, step by step. These 4 videos are really going to help you out, and especially this 1 hour and 20-minute training. That's really going to help you out. If you are looking for a really good trading system that you can start using in the markets, then just make sure you check out that bonus number 1, that bonus number 1 video there. That I'll walk you through my number 1 short-term income trading system that I use, and also make sure you join me. Make sure you join me for my top 1% trader live training that I'm running. So we can see that through there. Now let's go have a look at some things here. I want to share with you looking at the mining sector. Okay, so let's go have a look at the mining sector here, and I want to just bring it back to a blank chart here. Here is something, and this is something, what I'm going to be talking about here right now is, in this Master Trader Bundle, I talk about video number 4 and 5 is about this, video number 3 and 4 is about what I'm about to talk about you right now. A technique that I'm about to talk to you about right now. So, the technique I'm about to teach you right now is what's called energy using and energy, and obviously, yeah, the energy field in the markets, okay? So, the market moves like an energy field. So if the market goes up for a while, if the market goes up, it's using energy, right? It's buying, it's going, and then guess what happens? It gets to a point where we have to have a rest, and that's when we either get sideways or we get pullback, and then we go. We get pullback, and we go, right? So that's what happens. And this little bit of a man, right, through here, I can so draw. Right, he's about to do his little thing here, and it looks like he's got one leg broken there, but that's okay. He can walk up there with the crutches. Okay, so anyway, so this is like you going to the gym, right? You go to the gym, you start, you're all rested, you're all refilled, you're ready to go. But after a while, what happens? You're training, and you're training, and you're training, right? And then guess what happens? You get to a point where you're like, man, I am so exhausted, I need a rest. And then the market gets a rest, and it's rested, and it's rested, and it's rested, and it's rested, and it's rested. And then we get to go again, right? We re-energize, we refueled, ready to go for another good workout again, right? And we do this thing through here. And then guess what? We get to a point through there. So this is obviously, this is step number 1 was trend analysis, what I walked you through a minute ago. This is turning into like a bit of a training, full education session for you guys. So anyway, step number 1 was about, this is trend analysis, yes, but now I'm going into the trend, into the market to say, okay, this is the reason why certain things happen, because the market gets tired, okay? Gets really, really, really tired. And so by looking at that, you'll notice that a lot of the times, and this is the reason why, if you think about the markets that if you see the meme stocks, right? Or was it BBBY, I think it was just recently. Let me see if I can... Yeah, Bed Bath & Beyond, right? Look at this here. Why did this go shook straight up and then shook straight down? Here's the thing. When any market does the shook straight up, right, this, right? Remember what I said a minute ago, that the market is like an energy field, that energy source in the markets, right? The market is like an energy source. And if the market's going up, it's an energy source, but it needs the rest. And so the natural rhythm of, say, the body, right, without injections of maybe pre-workout or whatever, you're going to do a bit of a workout, right? But then you're only going to get to a point where you need a rest, and then you're going to do a bit of a workout and then rest. But what happens if you come in and you take 400 milligrams of caffeine, and you've never taken caffeine before, and then you go do a workout? Guess what happens? Whoa! Right, you're ready to go, right? And you just shoot straight up, and you're going and you're going and you're going. You're like, wow, this is amazing. I'm having the best workout of my life. And you're doing high intense workout, you're taxing the nervous system, you're doing some strength training as well too. It's like you're going for a couple hours and man, you're going, right? And then guess what? Inevitably what happens? Oh, you just crash because the caffeine runs out, your body is taxed, your body's tired, and then you crash, right? Remember I said before, the market is an energy field, and that's the reason why whenever you see a market do something like this, I'm sorry, but the human being, before he went to the gym, he used too much caffeine, right? Yes, the caffeine gave him a really good workout, but what tends to happen, at least when you see these big movements going, you get a retracement back, you get a very hard, sharp crash in the markets. That's why whenever we see very big moves up like that, you know it's a bubble, okay? That's a bubble. This here is not. The market goes up, the market goes down. The market goes up, the market goes down, and it might do something like this, and then it goes up again. See how there's a difference here in the green line compared to the blue line. So whenever you see something vertical like that, don't be sucked in, okay? Do not be sucked in by the markets because they will suck you in, okay? And just remember that up here, this point through here, that's when you get into that last little push through there, okay? So here's what happens sometimes in the markets that causes false breakouts and possible end of trends. And the reason why I'm teaching you this is because we're getting to a possibility of looking at, say, the mining sector, such as the GDX. We're possibly getting through this, okay? So think about this for a minute. For what I just explained to you just then, okay, is the energy use of the market. Man, I'm going deep for you right now, okay? So the energy use of the markets is what? It's what I've just talked about there, right? So this is what happens sometimes. And so you go for a move. That's actually this here, all right? So what happens sometimes in the markets is that you'll go, right? You're doing a bit of a high interval training, right? And then you go, and then suddenly, like you do that, and then you may have a little bit of a rest, right? But you use all this energy to go up, and then you had a little bit of rest, 30-second rest, and guess what? You're ready to go again, and then you have a little bit of a rest, and then you're like, now you're getting really tired, right? Because you just had really little rest times, and you had very long workout times, very short rest times, long workout times, very short rest times. And then your coach says, okay, let's give me one more, right? And then you get one more up to there, and you give it all you got. You got that last little bit there. And then the coach says, okay, now you can have a 5-minute rest. And then you pull back a little bit through there, right? And then now you rest. Did you see what I just did there? The market does the same thing. This is what the market does. And a lot of the times when the market goes up like this with very little pullbacks and a lot of movement in a direction, right? They tend to do this sucker breakout towards the end. This is what causes false breakouts. So for you people that are part of my coaching program, and if you go johnsprivatecoaching.com. If you're interested in becoming a private client, I've got a few different packages there from per month to say lifetime access. So if you're interested in becoming a private client of mine, just go to Johns, JOHNS, privatecoaching.com, johnsprivatecoaching.com. And on there, again, you'll be able to see all the details to my program and stuff like that. You'll be able to see from there. So again, johnsprivatecoaching.com, and you'll be able to select the different packages. Or if you want to become a private client and get weekly coaching from me, so go to that package there. So that's what actually happens in the markets, right? But the same thing happens for the downside. Remember, this is not just for the upside. This is for the downside. Remember, flip this upside down. You did it, and just think about this. And it's the same for the downside as well too, right? The upside is much more easy to understand because you're going up a hill, like I say. But going down is the same thing, right? There's a lot of energy. The sellers had to sell it, and then they get tired. And then they sell it, then they get tired. And there's a last little selling bit here before they're just so exhausted of selling this market, and then they turn around, right? And this is where they suck you in right here. Okay, this is where a lot of us suck in breakouts, and this is where a lot of traders, if they're watching the markets and they see a big breakout, they're like, "Oh, this is a big breakout," and then if it reverses on you, if this has happened to you before, you're like, "Why the hell did that happen?" I guarantee you, 9 times out of 10. I guarantee you it happened for this reason. And then the other big reason would be if this was, say, a daily charts, you're looking at, say, a daily charts, but then when you look at your long-term weekly charts, there was probably some sort of major significant support level that was major significantly through here. So it's either, and sometimes it can be a combination of both, okay? But more times than not, I've had so many losses in my time. I've been trading the markets for 18 years now, but I've had so many losses in my time and it's because of this situation through here that I've seen that it's helped me identify when a false breakout is happening, and therefore I don't take it, therefore I don't take a loss, right? And possibly you can see it's actually getting towards the end of that move. So this is what happens so many times. All right, you know what? Let me actually share with you an example here that I actually I did for my private clients recently. Again, if you go to johnsprivatecoaching.com, you'll be able to become a private client through there. I recently ran a bit of a special webinar recently on my private coaching. So if you go to johnsprivatecoaching.com, you'll be able to see whatever package you use. Click on that. Click on whatever package you want, and then it'll take you to another page with all the details about the coaching. But this is a situation that I've used here to help my private clients, right? And this is what I said here. I was talking about like false breakouts and why they happen, and how you can identify the false breakout happening, right? So I talk about I gave the exact same pattern here. Okay, is like you can see the exact same pattern here that I drew, is that when the market has a very big up move and then it does through there, that's actually, see how it's a very, very, very small pullback, right? We want a up move, but then we need a very long rest. We need an up move, and we need a good rest. Okay, but whenever the market does number 3 here, which is what I just explained there, this is the reason why there's trades like this, false breakout, right? Market goes up, and then it goes sideways, and then it breaks out, and then you're thinking, oh, here we go, and then guess what? And then the market reverses, and you're like, you little fucker, like, why did that happen for? Like, why did that happen? And then you're like, I can't believe that happened, right? But again, for me personally, I used to get sucked into these all the time. Now it's been it's probably been 3 or 4 years now since I've stopped taking these trades, because a lot of these trades are false breakouts, right? So I do trade breakouts on a strategy, but I wait for really good sort of high quality sort of breakouts there. And let me share with you. This is an example of what I mean by what I just talked about there, right? This is a trade here that I took recently. And as you can see, right, see how we actually had this is the trade that I took recently again. See how we didn't have a very big up move. We didn't have something like that and then like that. Notice how we had a very nice up move, but then we had a nice sideways phase as well. Then the breakaway bar, and then we had an up move. So if you are getting the situation where you are causing a lot of false breakouts, and you're getting stuck with that, you now know why that's actually happening within the markets. So let's actually revert back that. And the reason why I wanted the prefaces with what I'm teaching you here is to show you the techniques that I'm using when trading these markets, so you can understand what's happening with the markets. You can see the trend, you can see, and so on and so forth. And again, this sort of stuff is exactly what I teach my private clients, and it's the reason why my trading is so successful and why I get a massively high success rate. And again, if you'd like to get more private coaching from me, then just go to Johns, johnsprivatecoaching.com, johnsprivatecoaching.com, and then you'll actually be able to get access to my #1 strategy, my private coaching, and so on and so forth from there. So we could see that. So if I zoom my charts out through here, and if I zoom my charts out to get a really good true picture of what's going on in the markets, notice what's happening right now with the GDX. Now, prefaces for what I've just said there. Look at this here, right? So we had a big move down and a little pullback, and a big move down, and now another little pullback, and now we're going through another move down. Guess what this is probably likely to be here? We're probably getting towards the end of this move. Why? Because what I've just explained to you, right, is an energy source. If I flip this upside down, right, so let's actually do this here. So, because I know sometimes you can't see it from a bearish point of view, but let's actually do this from a bullish point of view, right? So I'm going to bring up a good old snagger tool. I'm going to flip this upside down. Let's go flip. There we go, right? So here we go. So this is the example of what it looked like on a flip side. So the market will go up, 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 up. And remember I said before, it's like high interval training, right? Which I love doing. I love just kicking my ass, right? So high interval training, up, 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 up. And guess what? Little pullback. And the coach says, let's go again. It's like, oh shit, okay, I'll go again. And then we get a 30-second rest, and he's like, okay, one more time, and you give it one more time, and it may go a little bit more, and then a boom. Right, then a boom, right? Remember I said before, remember I said before about the whole false breakouts, and when you do get the false breakouts, you know, what to look for, you know, and so on and so forth. So that's what you want to be, looking for, from what I mentioned from there. I was just thinking about something to say. But so you see that through there. So it doesn't mean we can't keep going down. But if we look at a move from say 1%, right? Just say this entire move from there to there. This here is 0, and this here is 100. Okay, we can never get the 8, and this is the 80 to 100 is hard to predict. The 0 to 20 is hard to predict. That's why we grab the 20. So this is the 20. This is 0 to 20. If we're looking at it from a scale, 20, and this is 80. Okay. This is where, for me personally, the meat and potatoes is that 80% there, right? 80%. So that's what I'm looking for. And so, but if I see this here, if the market's been going out for quite some time, if this was 0 up here, where we are right now is possibly in the 90 to the 100 range, okay? Is that we may get a little bit more downward move, but then we're probably going to get something like that because now we're just totally exhausted. We've been going down so much without any really significant pullback. So this point through here, what I'm looking at is probably likely to be some sort of significant end of move. Doesn't mean end of trend, because we could get a pullback for a while, have a bit of rest, and then go back down again, right? So it doesn't mean it's gonna completely change and we're gonna go to the moon. I'm sorry to burst your bubble, especially you mining guys out there. You're like, oh my goodness, John said it's the end of trend. It's gonna go to the moon. No, okay. Well, all this simply means is possibly the end of that leg, right? Remember I said before, the market goes up and up and up and up, and then we have a bit of a rest for a while, and then it goes back up, up and up, right? Same for the downside. We can go down and down and down and down and down, and then we get this little, this little false breakout, not much of a pullback, and then we get a pullback, and then maybe we continue the trend, right? It's just the leg there. So that's what I'm seeing through there, traders. I hope you enjoyed this session. As I said to you before, traders, if you would like to just get some help if you need some help, then make sure you grab that Master Trader bundle that I walked through there for only $4. Or if you would like to get actual private coaching from me, then I've just opened up some spots. I ran a training and some special recently. So if you go to Johns, JOHNS, privatecoaching.com, I've left that special up today as well too, so you can see all the details on there as well too. So go to johnsprivatecoaching.com or go to johnsflashsale.com, either way, to get your help, and I'll see you in the next video.